Good afternoon, everyone. My name is Eveli Lepamets from Nasdaq Tallinn, and I welcome you today on Baltic Horizon Fund webinar. The webinar will be hosted by the fund manager of Baltic Horizon Fund, Mr. Tarmo Karotam. Firstly, Mr. Karotam will introduce Baltic Horizon Fund's annual report of 2017. Right after the presentation, we will open the floor for questions. I invite you to use the question box on the right side of the screen to send in your questions. You can send questions in during the entire webinar. All questions will be answered after the presentation. And Tarmo, if you're ready, please go ahead, start your presentation.
Thank you very much. Welcome to the Baltic Horizon webinar. This webinar will be mostly about 2017 results, but since we are already in April and several things are happening or have happened already in the Q1 of this year, then I will also briefly talk about those things. So let's get on to it. So the detailed agenda for today's presentation is, first of all, a traditional overview of the fund, of its portfolio, recent acquisitions, then continuation with the financial results of 2017. We'll also talk about the bond program, which was announced last week on stock exchange. And then an overview of the unit price developments in stock exchanges of Tallinn and Stockholm, and then the wrap up with the future outlook. So here we are, almost 20 months after first listing the fund on Tallinn Stock Exchange. We have underwent quite a strong growth period. It was the original request of the investors back in 2016 that, in case good opportunities present themselves, then the fund needs to grow. The fund needs to become more diversified, welcome new investors, so that it will actually become more liquid fund for investors, some that wish to enter the fund, but some also who wish to exit. And I think month by month we have been growing. We have found certain investment opportunities that we believe are suitable with the investment strategy, but also are there to deliver the return targets that we've had in place. That means 7 to 9% dividend and 12 to 15% overall return. Again, these are long-term targets, but I think all of our investments are capable of returning those figures to the investors. Today, with 11 properties in the portfolio, I think the fund is, becoming more and more well diversified. Happy to see that that there is a good distribution of assets over countries and segments. We still continue to invest into office and retail only. The other part, which is 6%, it is actually Coca-Cola Plaza, the cinema building, but it can be also described as partly retail. And the fact of the matter is that we still see more potential in these segments over long term than in any other segments at this point. With finding properties in the cities of Tallinn and Riga and Vilnius, how we been going about that is just that in Tallinn, beginning of this what we call the second real estate cycle, which started after the crisis in 2010, We have seen quite a quick development of the property markets. Therefore, our most of the investments in Tallinn have been made earlier, with an exception of Postimaja now. After which we have also found good opportunities in Vilnius, but more and more we see a revival of the Latvian real estate market, especially the office market. Properties being for sale at reasonable prices. The office market, the demand in office segment in Riga is strong. The rents, if are they're increasing the most in Latvia today in Riga, so we're continuously looking into Riga as we speak today. And I think important to sort of note is that 6 out of 11 properties, in our opinion, hold expansion potential, and I'll talk a little bit more about that in the end of the presentation. So this is a nice colorful slide of the properties that we have today in the Baltics. Happy to state that the size of the properties is still per property is still let's say none of the properties is sort of taking too much of the total portfolio. The biggest asset today continues to be Europa Shopping Center, then Postimaja acquisition. Second largest, and the third largest has become the Domus Pro office and retail complex, 24.3 million euros in Vilnius. If you can see it in the picture on the left side, the office part was finished in December. The tenants have moved in. It is virtually fully occupied, and quite satisfied to have such an attractive tenant mix in this complex. So in addition to office space, there is a large gym, health club with a swimming pool. There are do-it-yourself tenants, of course, Rimi groceries, Assorti, many food takeaway places, and also the virtual gaming room now. So, and last but not least, the ballet class. So, and a very interesting tenant mix where actually people could find all kinds of services for their needs. Latvian forestry property on the left, that was an acquisition completed also in December last year. And here in this slide, we have depicted Coca-Cola Plaza, the cinema building, and Postimaja separately, but the plan is to join the two buildings together. So very likely in the future, we will present this as one investment case and one property, which will also have its own new name. Here's another view on the portfolio, and we are now have exceeded 105,000 square meters of lettable space, of which more than 97% is occupied with long-term lease agreements, and the average rent being still very competitive, on average 11.9. I truly believe that our properties, all of them in the different segments, remain competitive in terms of price quality relationship. And it has been so that not only in Tallinn but Riga and to some part in Vilnius, the construction prices continue to increase, signaling that new developments, especially in office segment, will require a rental level of at least 13 euros on average to make sense for the developer. So the most tenants are still in Europa Shopping Center. Now we have also passed 200 tenants as whole. The weighted average unexpired lease term is close to 5 years, and the potential full-blown NOI for the whole portfolio is close to 15 million. This is a slide which is usual also in my presentations, but this is an update. So I don't know if any of you recall in the previous slides or presentations, the largest tenant was firstly G4S, more than 10%, and then the Latvian State Forestry Management Company also with about 10%. But now with the acquisition of Postimaja, this has changed a bit. The largest tenant now, because of the size of the portfolio, has reduced to 8% of the annualized rental income. Quite happy with that. So more diversification in the portfolio. It's interesting to note that the Rimi has become the second largest tenant. They are now in 3 of the properties in Postimaja now as well. And G4S headquarters ranks number 3 now. New tenant in the mix, H&M. H&M doesn't require any introduction. H&M tenant, if you look how are they doing nowadays, it's been quite interesting actually, because their stock price has been quite volatile lately. It has been decreasing, and they are I wouldn't call it struggling, but they are definitely living through a change of online sales, challenging the sales of their stores, and it is something that we closely also monitor, because H&M as a standard has rental level, quite strictly tied to the sales of the stores, and Swedbank still remaining there with their IT department in Lincona, and Sky number 10. The maturities of the existing leases, you can see, over the next few years, not too many lease agreements are maturing. Many of them maturing between 2022 and 2024. I can only say that already now I'm working on several lease agreements that have a term on one of those years, and renegotiating them in order to get a better sort of distribution of maturities in the coming years. It is still quite standard to sign lease agreements in office segment with the term of 3 to 5 years non-breakable, and in retail 7 to 10 years non-breakable. Now let me just talk about Postimaja for a few minutes, and the expansion that we're planning there with Coca-Cola Plaza. This is the latest rendering of the future vision of this complex, of this corner in the central Tallinn. And if you can recognize the Coca-Cola Plaza building being the one with a yellowish facade, which, if you look closely, is also extending away from the current facade of the property, and also modifications to the Postimaja facade, and then the middle part. It's well lit up at this point. We are considering a special EFTE material, which is actually a plastic material for the roof and for the facade. It's an innovative, I think very, very flexible, very durable material, that has been used quite widely in Germany, in Central and Southern Europe, but also more and more in Scandinavia and Sweden, not yet in the Baltics. And the material EFTE is actually like a bubble. If you can think of any football stadiums, such as the Allianz Arena or other, then you can probably get a good picture of how this could look like. It's an ongoing process. It's not been fully decided yet about what materials to use, but this is definitely one of the more exciting materials. The idea is to expand the both properties up to 33%. The discussions are ongoing with the architects and then the city. We are developing the final detailed architectural solution now, and some things may still change, but the overall goal is to keep the architectural value of both of these properties. Many of you may know that Postimaja is a historical property built in the beginning of 80s for the Moscow Olympics, and we're not planning to make major changes there. But it is very likely that in Postimaja 3 and 3rd and 4th floor, which actually 4th floor is not existing today, will be rebuilt. We're planning to disturb the current tenants there as little as possible. That's a rule that we need to follow. So, but still, this year will be for the planning phase and to the discussions with the tenants and other parties involved. So, of course, this is a major project. But we fully believe in the potential of this project in the heart of Tallinn today, especially when up to 8 to 10,000 square meters could be added there. The complex will be a multifunctional complex with office premises that are intertwined into the two buildings, into the passage. It is, as you can see, a goal to improve the access through these buildings, and this is what also Tallinn City is recommending and very much even requiring, is that the corners of this complex should communicate with the street levels as much as possible. And if you can, see the street on the left, this is the head street of Tallinn, which will become very pedestrian friendly in 2 years' time. And the street that goes right to the port area will become more pedestrian friendly as well, and have a tram line going to the port area. So we truly believe that we're in the heart of Tallinn here. In terms of concept, we want to complement, the CBD axis of retail space, starting from the Revala Street to the port area. Tallinn department store listed company in Estonia is also replanning their department store on between Revala Street and Estonia Boulevard. Viru Center will undergo some changes, and then we are there on the corner of Rotermann quarters, which will connect us to the port area, and hereby a good reminder that it is where 10 million tourists from Finland, embark on an annual basis, and we definitely expect them to become visitors of the complex in the future as well. The overall tenant mix of this complex will then be a mix of current tenants there are today, and including some fashion, but also a lot of services, Post will definitely be there. Rimi Rimi grocery store, New Yorker, H&M, the Cinema, My Fitness, with the renewed premises, and definitely some beauty and health services as well. Restaurants, cafes are planned. It is the idea that the ground floor of Coca-Cola Plaza will also be replanned, so that that would become more an offering of cafes and restaurants in the future. Now, just a quick overview of the main numbers at the end of 2017. We have reached an NAV of more than 100 million, a gross asset value at the end of last year of 2015. That did not include the Postimaja closing, which happened in February. The direct property yield and net initial yield hold strong. We haven't, since most of our lease agreements, not most, but quite a few are indexed by European Union CPI. Then over the past few years, the EU CPI has been close to zero. So automatic, let's say, indexation of lease agreements hasn't been that, let's say, resultful. But since we have many lease agreements also with a local CPI, and now the indexation will pick up because of Estonian, CPI being for last year close to around 4%, and the estimation of EU CPI now close to 1.5%. So that's the automatic sort of renewal of rental levels that is taking place this year. And we remain, yes, strongly occupied. Now, the equity which was raised in Q4 has been invested mostly in Postimaja. As a matter of fact, Vainodes property was also closed in December, but we had raised money for this property already in June. However, due to the tax changes in Latvia in the middle of the year, it took us a few additional months to make sure that we structure the transaction properly, so that there are no adverse sort of influences from a taxation point of view, and we were able to do that. And but that took us a while then to close the property. For Postimaja, which was closed in February this year, we raised money in November. We had a group of investors that particularly joined for the acquisition of Postimaja, visiting Tallinn and seeing the potential that this corner of the property holds long term. So that was a successful capital raising for the strategic asset. Now we still have some equity left from the capital raisings last year that we plan to deploy now into maybe one or two smaller acquisitions throughout this year. However, we are coming to close of this growth period that Baltic Horizon now has had for the past 20 months. And we feel that with a portfolio of close to €250 million and the opportunities that we see in the markets today, we should rather focus on the portfolio more and more. We have expansion potential in not only Postimaja and Coca-Cola Plaza property, but many other properties. So it is not to say that we are totally out of the market, but we're definitely more and more becoming critical about what is for sale in the Baltics today, and at what prices. So then a few words about the income statement, and you can look at how the fund has been growing over the past few years. And 2017, the rental income of 11.8. You have to keep in mind that the two of the properties that were acquired by Nordas and Postimaja with a total value of 55 million euros is not fully reflected here. And of course, 2018 will be the year where the rental income, total rental income of more than 3 million euros will be reflected fully. And I think in many other ways, the numbers have increased, organically in line with the size of the portfolio. Many people ask me what is, service charge income and cost of rental activities. Just to clear that up, it is so that the landlord in the Baltics usually signs the utility agreements on behalf of the tenants. In many cases, it's also the case of Baltic Horizon, but not all of these costs are remunerated by the tenants. Mostly, it's due to the structure of the lease agreements and the customs, how the relationship is sort of traditionally reflected in the lease agreements. More and more, of course, we are moving towards triple net agreements, but sometimes when you inherit properties, you inherit that with lease agreements that have been signed a few years ago. Of course, the key figure to look at is net rental income after these expenses. Owner's costs have been removed, and of course we consider these sort of items in acquisition of each and one of the properties that we make. So it's not a surprise for us. It's just how it is structured. I would say that there is potential long term to get these costs remunerated by the tenants, and that's what we are continuously aiming to do. 3.6 million was a small valuation gain of the investment properties. In some cases, it was a small indexation of the rents that determined the slightly higher value of the property. And in few cases, there was also some small adjustment of the discount rate downwards, but a very, very small adjustment, I would say. I think overall we are satisfied with 2017, with maybe a note that unfortunately it took us a little bit longer to close the two properties, but we are trying to do that as quickly as possible without sacrificing the terms and conditions of the deals, because we were planned to hold the properties very long term. Then just a couple of notes about the balance sheet. As you can see, at the end of 2017, we had quite a large cash balance, and that was due to the fact that the equity we raised had not been fully invested yet. We have about 6-7 million euros of equity still to be deployed. The capacity then about 15 million of a new acquisition, maybe a bit more. So that is currently what we are looking for. at the moment. Liabilities also doesn't reflect the bank loan of Postimaja and assets as well. So that is slightly changing now in the first quarter of 2018. Key indicators. So there's lots of key indicators here, and some small print. How exactly are they calculated? There's various ways how to look at the portfolio, and many people have also asked me that your dividend target of 7 to 9%. What is it exactly? Is it based on average NAV? Is it based on paid in capital? Is it based on market price? Officially, for our purposes, we calculate it based on the paid in capital to the fund. That's the target. Because based on average NAV, the NAV can be influenced by revaluations, so up and down. So that I wouldn't say is too representative. We have chosen right now to base it on average paid in capital. I know that many investors look at it based on at what level they acquired the units, which is, I think, very fair. So unfortunately, there's a bit of confusion sometimes there, but I think I welcome everybody still to look at it from the point of view that what's the average price they paid for it, and then would the portfolio be willing to or be able to deliver this range of dividends? So I think there's. Yes.
Sorry for interrupting you. Could you share your screen? We can't see the numbers of 2017.
Okay. Let me just see. There's something happened here. I think some technical issue. I'll see if. It seems that there is some technical error here. I hope no one minds if we just continue from here. This presentation will be available, through a press release, stock exchange release after this webinar. So if anybody still has any questions on those figures, I'm happy to answer them privately. I think at the moment it's best to continue. So last week we had an issue through the stock exchange about Baltic Horizon looking to issue a bond, and let me just try to elaborate on why are we doing this. What are the key reasons for it, and how we see this working for the capital structure of the fund, and also for our investors. The bond program size we have determined based on two things, mostly because the idea of getting the bond program up and running came from the fact that even at our low and conservative LTVs and bank financing goals, we have with local banks had more difficulty in getting bullet loans, even at 50% LTV, and that means that amortization in in the portfolio has been quite notable, and this is a cash outflow, and I think our LTV is already that low that it's no point to really deleverage the fund further down to 45 or 40%. I think the return on equity for the investors and vis-a-vis the risk would be more attractive if we can keep the LTV at around 50 to 55%, and thus maximize the payouts to the investors on a quarterly basis. So that's one reason. Second reason is, of course, the size of 30 million would attract, certain, investors that would not, participate in a 5 or 10 million euro bond program. And the exact terms of the program is not yet clear. We are discussing this with the investors. We believe that they will be attractive enough. And of course, what the bond program brings us is a lot of flexibility, to consider these sources of financing for various things, including expansion projects. I wouldn't say 100%, but it looks like we are currently trying to optimize the capital structure so that new equity issues are currently not planned. We have certain capacity within the portfolio to invest into the expansion of the properties, and we can always use sources of financing either from the bank or from the bond program to continue with these expansions. We are getting a rating from Standard & Poor's, and I think that's interesting to see what the rating will be. How we have already talked with investors. It's been very attractive for them, the program. It is likely, yes, that the cost of the bond financing will be somewhat more expensive. I think this is reasonable to expect, but how much more expensive, we'll figure that one out very soon. However, the overall cost of financing, we don't expect that will increase notably. Let's say the combination of bank financing and bond financing, because we're only refinancing a portion of the bank loans in order to get the amortization removed from these contracts. So effectively paying down the loans to 40-45% LTV, and then topping that up with then bond financing. It is also important for us to diversify the capital structure and sources of financing for future periods. And the timeline is now, we've been working on it for a few months, April and May, when then this becomes clear, how it will be executed, at what terms, and so forth. The listing prospectus will be also prepared for this issue, and the bond will be listed on Tallinn Stock Exchange. Now there is a slide on the unit price movement, and I've received quite a few inquiries about the unit price movements on both Tallinn and Stockholm stock exchanges, and what is my opinion why the prices have moved as they have. I can only state here that I've investigated, of course, this myself as much as possible. As you know, with the listed companies and funds, I only see, mostly the nominee accounts in our investor list. I see which banks are trading and how is it going. I think the turnovers of the fund have been increasing notably this year. So from the liquidity point of view, it's been more and more attractive for the investors. At the same time, it looks like, especially lately, there's been a very strong sort of alignment happening with unit prices both in Tallinn and Stockholm stock exchanges. When some, let's say 6 months back, the Tallinn unit traded at let's say 4 or 5% higher than the Stockholm unit, then there's been some leveling out happening now over the past month or so. So that only leaves me a chance to sort of say and conclude that there's some arbitrage happening here. So somebody selling in Stockholm and the units to an arbitrator who is then selling these units in Tallinn. Of course, the price is at the low end, so you could also see why these cheap units have been picked up in Tallinn. It's a work in progress. I think we will continue to monitor this, but yes, it seems like an equalizing of the unit prices have now been happening over the past month or so. Yeah, unfortunately, the screen seems to be a bit crooked this time, but here I've come to the final part of the presentation, where I would like to more talk about the future outlook and on the expansion projects which are currently in preparation. We have identified 6 projects that are there today within our portfolio, and there are 2 of them in Tallinn, 2 of them in Riga, and 2 of them in Vilnius. In Tallinn, in addition to Coca-Cola Plaza and Postimaja expansion, what we are planning, there is also some development potential and construction rights on G4S property. G4S, as you know, is a single tenant property rented out to G4S for a long-term period, and we're looking to prepare a new architectural vision there for the expansion. This year is definitely a preparatory phase, and of course, with these expansions, we just want to now become ready to move in case. So, you can only move with these projects when you have a certain level of pre-leases, and for that we need prepare an architectural project and have all the permits in place from the city. So the question, when would these projects realize? It depends. It depends very much on the tenants. But yes, I would say probably no construction will happen this year. In Riga, we have Vainodes property, which has expansion possibility. We are there also with architects developing a visualization. How would that look like? What's the best use of those building rights vis-a-vis also the current tenants in the building? So it's the building rights on the land plots that we're trying to create value from. And many people have also asked me that will you continue buying properties now actively on the market? And as I said previously, more and more we are becoming critical about them because of the prices. They have moved out, and actually the risk of overpaying has increased. So we'd rather take more of an expansion risk right now to create value, to do these projects actually with yields of 8 to 10%, maybe even higher. So to create value for investors in this way. In Riga, in addition to Vainodas, we have also expansion possibility of Upmalas Biroi, and Upmalas Biroi has 8 tenants currently. They're all looking to expand, so hopefully we are able to get the tenants, move the tenants, at least some of the tenants from Upmalas to this expansion, which is just across the small street there in Riga. Domus Pro, there are possibilities there still in this complex. We're looking into that as we speak. We had a very successful finish of this project stage 3 when the office building is now fully let. We have some tenants that are still interested in the location, so we're looking for ways how to serve them. And then Duetto 2, if you may remember, about a year ago, we acquired Duetto 1 with an option to also acquire Duetto 2 when the YIT developer has completed the project. So this is definitely on the agenda as well. And hereby, I think I would like to open the floor for questions and to see if I could answer any of them now separately. Evelyn, do you see any questions? I don't see them at this point.
At the moment, just one arrived. I will send it right away to you. Just a second. Now you should see it.
Yes, I see it. The question is regarding the period when the expansion of Postimaja would commence, what potential impact of funds financial results do you forecast? I presume this is a question on Postimaja itself. You know, the property was acquired with the cash flow that it has right now, and yes, you know, there was a small amount, about 3 million euros that was paid for the potential of this expansion. So we don't expect the NOI to move significantly. I think the NOI there is stable. Where you know, the footfall of the properties is increasing already now, you know, and in a few years we'll be waiting for the main street to welcome more pedestrians, more people into the area. So we're confident on the footfall increasing over the next few years. So you know, it could be that the expansion is postponed, maybe in a worst case some period, but during that period we don't expect any adverse conditions or any negative impact on the NOIs. Rather positive impact. I hope that answered the question. 48% of the portfolio is in retail. Could you please comment how e-commerce and online retail can affect your portfolio going forward, and now how you plan to hedge from it? Retail stores in US and Europe are going bust. Yes, this is a question I get quite a lot. You know, when we look at our retail portfolio, then our retail assets mainly are in the hearts of the city and in the highly densely populated neighborhoods. We don't own any big box shopping centers in the outskirts. We don't, you know, own any destination shopping centers. Rather convenience stores and lifestyle centers. I would put it this way. So it is true that there's been a major impact in the US on these shopping centers, but you have to also recall that America is one big shopping mall, as they say. It's there's just too many of them anyway. The worst property I would buy today or that could be bought today in the Baltics, I believe, is again one of those big box hypermarkets. Somewhere somewhere in the fields close to the city border, because these hypermarkets are closing themselves down and definitely shrinking their concepts, because in these hypermarkets now most of the stuff can be bought online, and whereas in convenience stores it's still about small stuff. It's still about getting your food, getting your fruits, getting the toothbrush. So we don't see a major impact to our shopping centers as compared to America yet. What we do see, however, is some change in tenant mix, and definitely more service related tenants are moving in. As I mentioned, quite interestingly, we now have I think 2 or even 3 these virtual playrooms, and it's not for kids. It's really virtual experiences and gaming. This is sort of entertainment, very attractive. They even market themselves to businesses to have their small get-togethers there, and similar. So I think what I can say for our portfolio, we rather see a change in some of the tenants, and replacing of those tenants by new concepts, and I would say I'm also quite satisfied that we don't own any big box retail centers today. Large destination shopping centers, they have to work very hard to keep it attractive. I think there's potential for them to do that, but that entails a lot of investments into entertainment. Many of them are bringing in cinemas. For example, we already have cinema in the complex, this future Postimaja complex. So and of course, sports club. We have quite a few sports club in our shopping centers as well. So I think 4 or even 5. So I'm quite satisfied with, but overall we are monitoring the process, of course, closely. But perhaps that's the answer to this question right now. A question now. Let me see. There is. Could you please provide some guidance on distributions in 2018? Are you planning to keep them at about same level as last quarter? It's a very good question. I think I have to be careful answering this because it may be considered insider information. I think an investor should look at the portfolio. In 2017, they should look at how the assets were acquired now at the end of the year, and that 2018, the rental income of the portfolio is stronger. We are dedicated to our dividend policy. We're dedicated to pay quarterly dividends. So let's say I'm confident that it will be an attractive year for the investors. The amount of exact payments will be decided in due process, due time, when the results of the quarters have come in, and so I think the next dividend announcement will be on the week starting on the 30th of April, so not too far away. Then we have a few more questions. How is your work on ESG progressing? We are. This is an ongoing process, of course, and we have been, trying to acquire properties that are new, that are efficient. So from not turning them around and buying old properties and then converting them. This is not what we do. We are looking for ways how to optimize this. So right now, what is happening in the portfolio today is GRESP analysis. We are mapping all of our properties in a systematic way. We're mapping the costs that are associated with running these properties, how attractive they are for tenants. So based on that, we can derive conclusions. Today we have 2 BREEAM certified properties and 1 locally certified property in Riga to be an efficient property. We're looking to obtain more certifications, especially with the expansions that we're planning. Definitely this is a priority in the Postimaja Coca-Cola Plaza expansion project. So this is clearly highly on the agenda, and the progress there, of course, is not very swift, very quick always, but it continues to be very, very, very highly on the agenda. Okay, we have a few more questions. Any chance of slightly increase of dividends in the coming quarters? Smiley. Yes, I tried to answer this question already. We have one more question. Are you looking at any industrial warehouse type of buildings? If not, why not? We are not looking at any industrial and logistics type of properties, just for the fact that that for us it's a commodity. It could be copy pasted very, very easily. We think that the yield premium that is there today is not sufficient to cover the additional risk. We are, of course, brainstorming and having sort of internal work sort of groups in order to challenge ourselves and our strategy. Is it still relevant for the Baltics? Is it still relevant for the investors? And we have always still come to a conclusion that we have been focusing on retail and office, and I think we should continue to do so. That's what investors expect of us. City centers, CBDs. There should be more resilient properties also through any potential cyclical changes, corrections. So this is our strategy, and we're sticking with it. Rather, we are now focusing on the expansion projects, which do entail maybe somewhat higher risk, some development risk in these projects, but also quite attractive returns. So we're rather focusing on planning those projects out with the minimal risk as possible, and not all at the same time. I hope I got all the questions that were there.
Yes, we have no more questions.
Okay then. 1 hour. I think that's hopefully that was useful to get an insight into the fund management team's activities. There is, of course, news to come. In regards to the bond program, how is that progressing? Also dividend, quarterly Q1 results. So I think it will be an exciting year in many ways, and we have our work cut out for ourselves. So I wish that everyone to have a nice spring and to keep keep a close eye on our activities and hopefully positive surprises down the road. Thank you very much.